Let's now bring in the market watcher calling for gold to fuel a risk-on rally next year. Ben Emons is senior portfolio manager, head of fixed income at NewEdge Wealth. Carter, as you heard, is predicting a decline in the S&P 500. But you're saying that that gold could actually be telling us that there could be a risk-on rally coming. Why is that?
Yeah, it's an interesting combo, Melissa. You know, normally you think of gold like a hedge against inflation or uncertainty, and I think both still play. I think that's one reason why gold is up. And to Guy's point, like yields are down, dollars weaker. That's macro story for gold, but it's also a seasonal issue here. So we're in a really strong November month for stocks. It could be a good month for December too. At least that looks like it historically. Gold has an interesting pattern here too. It's actually doing even better than stocks in December. And specifically in years when the Fed is either easing or going towards a easing type bias. So I think we're in this stage here. This is why I think coming from the risk-on part of the story, gold appreciates in value when there's uncertainty. It appreciates in value when there's risk-on, when there is a apparent change of easing, of Fed policy towards easing.
You had a note out this morning, and there's one little bit that sort of confused me because you cited December outperformance of gold versus stocks by 2 to 1 since 2013. Is it just the 2013? Because then you also say that in November, if the S&P rallies, then that's an even better sort of outcome. But we've only had one easing cycle, really.
True, and that is a shorter history. But it is interesting to note that, though, that since that time, it's been very consistent every December, being a pretty strong performance for gold, especially when there's a rally in the stock market in November. What's also interesting that in September, gold tends to get sold off over every single year that time, too. So I think this is what investors maybe are doing. It gets sold off in September and revisited again in November, December. So I think this seasonality plays a role.
Carter, I asked you a few weeks ago what you thought about the idea of seasonality, and you basically said that it was bunk. And so I'm curious what because you're looking at betting. I can see the wheels turning.
Yeah, I mean, I'm thinking about all this. I think, look, there are a lot of, there's this, for instance, you know, how does the stock market do in years then in 5? Guess what? It's up almost every time. But here we go. In 2025, would you put everything you have on the market because it goes up in the years 5? Meaning, it's not to say numerology, and there is seasonality, but you can at this point get any data series to make any case one once, right? And so I think there's a lot to being very mindful of data series. But one thing is this, that I think statistically you need something like 130 inputs to officially have something be statistically meaningful. And almost all data series in the stock market, 13 years out of 15, there's just not enough sample sets.
Right. Let's say the data is a good indicator. What is the fundamental story? Because it sounds like you're saying that gold right now is telling us a story of deflation, that's what is driving that story. And that notion of inflation coming down sharply is a good thing for the markets.
It is because, you know, if you listen to Waller today, who was, I think, kind of extraordinary in his comments, he really started confirming what the Fed is moving towards to, right? We have this descending inflation, so the real rate is high, positive, and they could lower that nominal rate. I think that gives gold a bit because ultimately that's the true story of I think, the gold rally in the past. You know, it is interesting to think about gold as this smile idea. So I was telling Carter before, you have the dollar smile. The dollar goes up when there's uncertainty and there's a strong economy. Similarly for gold, there's uncertainty next year. We have an election. We don't know what's going to happen. We get a recession, maybe not. So lots of uncertainty. So that probably is part of the other reason why gold is up. And at the same time, gold rallies when there's this risk-on feel in the markets. And that's really when real rates and interest rates are declining. So I think this gives the gold, I think, a really good push for the breakout. So I'm with Guy and with Carter. It's likely going to break out to the upside.